currently, when you look at what's going on in the real estate market, there's so much confusion, and people are looking at it and saying it's, it's market sentiment, it's interest rates, it's banks aren't lending. I mean, there's all these things that are apparently stopping real estate from moving. Buyers aren't buying, listings are going up, and what the heck is going on? And people make it a lot more complicated than it really is. So let's just take it back to the basics. And it doesn't matter whether it's real estate or it's business. As a country, as a nation, as a province, a city, we need gross domestic product. We need productivity, which then drives jobs. When you have a province or a city that has lots of jobs, you have population growth. And when population growth comes in, you see rental demand. And as rental demand increases, supply goes down, rents go up, and over a period of about, well, let's say 18 months to 2 years is kind of where it lands. You start to see real estate prices go up as new immigrants into the country or interprovincial migration comes in, and they say, okay, I know I'm here, I've got a job, I've got a credit rating, I'm going to buy a home. And then you start to see the demand grow for homes. Now, that's always a fundamental. Those foundational components don't change. Now, on the other side of that, there are what we call the influencers. Interest rates are an influencer. They're shorter term, not necessarily short term, but shorter term. And they vary. There's more volatility within it. And you have politics. Right now, I'm going to say this, is that right now, the largest influencer on real estate is our politics. And I think it's going to actually, over the coming years, going to be the one fundamental that gets in the way. And it's not even a fundamental anymore. It's just policy is crushing this real estate market, and people are looking outside of that. It's just not that, JG. So a little bit long-winded.
Let's dig into that for just a second, because a lot of people, you have to be able to decipher, and this is what you're so good at, but you have to be able to decipher the politics that has a meaningful impact on GDP and the ones that don't. For example, let's just say there's politicking going on, which prevents the pipelines in Alberta and so on and so forth from getting oil out of the ground and pumping oil and increasing GDP. That's politics. And politics is just an influencer. But when it has a meaningful impact on GDP, then it makes a real impact on real estate. If it's just bantering and bullshit at the political level and it's just headlines and it doesn't have an impact, those are short-term influences. But a lot of these politics, they end up making their way into the GDP depending on which way it goes. And that's we've seen that. I mean, we just went through an incredible period where we saw that literally firsthand with COVID as an example.
Well, let's to your point, JG. So look at the government policies, and then this goes back to what I get so infuriated by is the gaslighting and the lying by omission is still a lie. And gaslighting, saying this is what it is when it's not that. It's like last month, it's like 54,000 jobs, we are rocking it. Well, it's all bullshit. It's 54,000 part-time jobs. We lost 9,500 full-time jobs. So when we look at and we say politics are a big part of it, it's the policy that drive things. So in other words, when you have a government that isn't driving productivity, then we connect the dots and we go to jobs. And without jobs, people aren't buying houses. They're not jumping up and saying, okay, let's go to the bank. Well, they can't go to the bank because they got a part-time job or they got a low-paying job because that's all that's available out there. So when we look at this, when we break it down into what it really is, the fundamentals of real estate and the fundamentals of what drive economies are what impact real estate. And so governments that are having poor policy in terms of driving and creating jobs are what causes a lot of the real estate issues that we're dealing with today. And that's foundational. It's not any more complicated than that. We try and make it more, and we keep looking, because I want to go back, and I don't want to step over something, JG, and you and I talk about this all the time. Our job as real estate investors, or even if you're a homeowner, by the way, is to look into the future. If you're a business owner, you're always looking into the future and saying, where are things going? So when we look at the data and we see GDP getting flat, when we see unemployment going up, then we start to understand that real estate is going to suffer. People need to be working. We need population growth. We need the immigration managed in a in a productive way, or in a way that we're bringing in immigrants that actually can contribute to the economy, which we're not doing. So if we look at the second chart and we start to see all of the numbers that are happening right now, we've got gross domestic product that they're saying is going to be 1.2%. We can look at the RBC report in the future. There's no way. We are absolutely going to be flat at very best, JG. Unemployment is, in fact, going up, and it's going to continue to go up, and the quality of jobs is going down. We're seeing a population flatten. They actually shut off the taps of immigration to the degree we don't know, because we can't even trust the data. So then decreased rental demand, we're seeing that already. Some are saying it's, and it is true, some of it is because of the sheer volume of supply that's on the market now. Look at the condos that are being added to purpose-built rentals in Toronto, Vancouver, as an example. Okay, so we start to see supply go up. But just as importantly is people aren't working, or they have lower paying jobs, and the cost of housing is still out of reach for many, and wages aren't keeping up. So then we see increased vacancies, which is happening. We're going to see decreased rents, which is happening. And then we're going to start to see an oversupply of properties, which in some property types is happening. All to say, we're seeing soft real estate, but we can't look at it and make it more complicated than that. It's not more complicated than that.
Yeah, and I think you bring up a good point, Patrick. And a lot of people, they think you, not me so much, because I don't make bold predictions like Patrick Francey. I leave that's your department on the bold predictions part. But they think that your bold predictions are like your Nostradamus or something, like you could see the future. But this is the formula you use to make those predictions. So just so everybody knows that's listening to the show, and if you're a longtime listener, thank you very much for listening. Please like, subscribe, comment below. We love the comments. But as those first three things turn around, gross domestic product, unemployment, and population, as those things turn around, that will start turning around the real estate market. That's not happening yet. So that's what we're looking for. We're just waiting for it, Patrick. We're waiting for the GDP to turn around, for the unemployment to start going back down, for employment to start going back up, and for population, depending on where you are. And the other thing I want to point out is this is regional. This formula is regional, meaning this is different in Peterborough, Ontario than it is in Durham, Ontario, than it is in Ottawa, than it is in Calgary, and than it is in Red Deer, than it is in Abbotsford, and so on and so forth. So because you can have a region that is declining and another region that is increasing, and that's what we've seen that disparity and that divergence happen over the last couple of years in Canada, and that's normal. That's normal real estate.
Well, there's a couple things that we have to shine a light on. So first off, we look at JG, you and I have got nothing to sell. If you want to subscribe to Rain Investor's Edge, okay, there's a small subscription. Yes, you can do that. Link in the comments below. But we don't sell real estate. That we're not here pitching deals. We're looking at the educational component and just trying to bring value to those individuals who are looking at real estate, whether as an investment or a home or whatever that might be, or they just want to look at what's happening in the economy and understand how it all comes together. Here's what we run into. So as you look at what's going on, people are going, well, interest rates are, they're better, but they're not great. Well, no, this is where interest rates are going. Why aren't people buying? Why aren't people buying homes, JG? Why are more people listing? What the heck is going on? Well, it's a really simple answer. And that is less people are working. They're not walking either, but less people are working. But definitely what is happening is there's no consumer confidence. And when you start to understand that, the uncertainty makes people hit the brakes. And that's fundamentally what's going on. And then our job, again, is to look into the future. And when we're looking into the future, some of the things that I'm talking about, I'm looking 2, 3 years down the road, 4 years down the road, but people have short memories. They don't, they stay in the emotion of it rather than in the patience of it. And by the way, I'm guilty of that too. And that's why I go back and go, okay, this is where it's going. This is where it's heading. Trust your thesis and adjust it if you get new data, get new information. But ultimately, and that's why we look at this all of the time, is do we need to adjust?
Are you saying that you're emotional around these things? Is that what you're saying?
Just a little.
Just a little bit. But listen, I want to up level this conversation a little bit, all right? This is fantastic. I love that we put this in the show today. I love that we're anchoring to this. Fantastic. But here's the thing I want to talk about. I want to talk about live right here on the air we don't have show notes rather. By the way, folks, this is we rock these shows from the get go. How is this formula going to change with AI? Because for the first time ever, that's one of the things that's happening is AI and the productivity that AI is bringing to the game and robotics. It is disconnecting GDP from people, and that's never happened before. It's been progressively going in this direction: the mechanization age, the steam engine, the agriculture, how it used to all be agricultural, and then we went to farm equipment, so on and so forth. But this is the first time ever we're completely going to disconnect productivity from people, and GDP is productivity, Patrick. In fact, that's how they measure it. They measure it as the productivity of a nation. Unfortunately, Canada sucks, but anyways, that's beyond the point. Um, how is that going to change this formula in the future, Patrick? Because you will start to have an interesting dynamic where you may have GDP in a particular region, let's say Alberta, or whatever, in a certain region, you'll have like some really good GDP, but you may have growing unemployment and you may have population decline, but the GDP will be going up because of AI and robotics. That's what's coming, my brother.
So, JG, I really don't know what the answer to that question is. I've given it a lot of thought. I listened to a lot of, experts, if you will, talk about what AI is going to do. I don't know how it's going to have an effect. Yes, it'll increase productivity, but it's going to take jobs away. And the other side of that is, the dream is that it'll increase productivity so much that people won't have to work. They'll be able to get paid and UBI and only work 20 hours a week or whatever the story is. And of course, we're humans. We can't sit around and do nothing. So that's just a story and an illusion and some picture that they're painting for for those individuals who, only have a job and don't think beyond that, which is hopefully not a lot of people. Maybe it is a lot of people. I don't know where to go with it. I don't know the answer to the question. I would be totally speculative.
I'll speculate on a couple things, Patrick. First of all, I think like we already say, we've been saying for years. I mean, it's one of our mantras: is real estate is regional, which means what happens in one region may be different than another region. I think real estate will get even more regional because some regions will really take advantage of AI. And I'll take Alberta as a perfect example. I'm going to take Grand Prairie, where Kevin O'Leary's talking about setting up a bunch of data centers and stuff like that. I mean, that could really drive the GDP of that region. But employment and unemployment might not go down. Not in the long term. In the short term, it will, because you'll need labor to build those data centers. But once the data centers are online and the data centers are now producing the intelligence and producing the GDP and producing the productivity, it'll be very, very interesting. So I actually think we're going to get way more regionalization. I think it's going to be even more important for real estate investors to be on their game and to think about this from a long-term perspective. Because right now, if you and I were coaching an investor, we would tell them to invest in a region that has good GDP, good employment, good jobs, good population, and the municipality is forward thinking and investing into the future, right? That's some pretty basic coaching we would give people. Well, in the future, the municipality's outlook on AI, if it in fact chews up the world the way we think it's going to chew up the world, is going to be that much more important. The municipalities that embrace it and that get behind it and that drive it will benefit way more than the ones that fight it. And I think there's going to be even a bigger disparity between winners and losers, in my opinion.
Yeah, it is. It is so new and so complex. I mean, you and I use it as a tool to increase our productivity. We use it as a tool so that we can produce more, we can do more, we make things easier, we feel smarter, all the stuff that goes on with it, but we're not in it, So in other words, we have maybe a small peek into the world of how it's changing jobs. One thing is happening, JG. I don't know if it's happening as much in Canada, but definitely in the US. And I follow the US and what's happening economically in the US very closely because it just impacts us. That's just the reality of it. That's just the truth. But what's happening in the US, and they're talking about it, I think quite a lot right now, is that there's big layoffs happening in the US. And what they're saying is these corporations are saying is they're replacing staff because AI is taking the jobs. And the reality of it is things are slowing down economically in the US, that people are losing jobs. So that's an interesting insight that seems to be bleeding out into the world right now, what is happening. And so it's hard to even know what to believe when it comes to what's happening with AI and what the impact's going to be. But I think it's a fascinating question. It's a fascinating time to be alive and look at what this technology is. I can't even compare it, back into the 70s when, computers and, we were starting to look at, I was still excited about a fax machine when I was 18 years old. So I don't know what it's going to be. I think it's just really interesting with what AI is going to do. So if you like these episodes and you want to learn more about what's going on with real estate in Canada, investing in real estate, and understanding how to invest in real estate the right way, head on down to the descriptions below, follow those links.